Hello guys, welcome to this ABC to Forex trading. Alright, in this video you will be learning all you need to know to start up your Forex trading. From beginning to the end, you will learn all you need to know about Forex, what is Forex, how to trade Forex, and then how to enter your first trading. So I would like you to just take your time and watch the video, and then all the necessary questions you have, you can also text it and send it to the comment section. All right, like and subscribe so that you have more of this video that will help you to be a good forex trader. All right then, before we go into the chart, I believe by now, if you're a novice, if you do not know what forex is, I believe you will not be able to understand what this whole stuff you are seeing on this window is. All right, but we're going to come back here, but before we now I began to explain to you what all this means. Let's first know what forex trading is all about. All right, so let's start from here. What is forex trading? Now, forex trading means foreign exchange, the buying and selling of foreign currency in digital forms, and also the buying and selling of metals and commodities. Example of currency that you buy in the forex trading market, it has to do with Euro USD, and then the metals is gold and silver, and then commodity, is crude oil. These are things that you can buy and sell in the forex market. So those are the things that is being traded in the forex market. Currency is traded, silver is traded, gold is traded, crude oil is traded. All right, commodities now. So those are the things that the exchange happens in the forex market. So if you want to trade forex and you're going into forex, those are likely the things that you find yourself trading. Either you're trading currency, or you're trading metals, or you're trading commodity. All right, now the forex market is the biggest online digital market in the world, with an estimated daily trade of $6 trillion. The market runs from Monday to Friday. All right, there's no weekend. The forex does not run Saturdays and Sundays, but Monday to Friday. The market runs from Monday to Friday, from 8 a.m. to about 10 at night. Then the market is divided into three sessions. You have the London session, you have the New York session, you have the Eastern session, all right, which is the Sydney and the Tokyo. All right, these are three markets that you can trade. Then who are the forex trader in the market? Now the core traders in the market are big banks and other financial institutions, like banks like the Dutch Bank, Global Bank, JP Morgan. They are the major market movers. All right, so these are actually the big banks in the forex industry. The forex industry is traded by major big banks and other strong financial institutions. All right, followed by the retailers, you and I, who have our little funds to trade with in the market. Now, how to buy and sell in the market? We buy and sell using a broker, or I will provide a platform as a medium of exchange. So in the forex market, that's what we call broker. Okay, brokers are the one that provide platform to which you can make your exchange in the market. You buy and sell from the market. Without the broker, you cannot actually trade. You've entered into the forex market. So the one that provide the platform to which you can fund your funds and then buy and sell in the market. Now, brokers bring us to the market through their platform, wherein we can buy and sell from the market. And we use also an app to register with a broker, and with that app, we can buy or sell in the market. There's an app there are various apps that you can use to trade forex. Okay, in which with that app you can register the app with the broker and then start buying and selling from the forex market. Now we have some apps used for buying and selling in the market, which we recommend some that are very okay, that is generally accepted. You have the MetaTrader 4 and MetaTrader 5. These ones are open source app, wherein you don't need to pay any subscription. You can either easily download them okay, and start using them. You have your C trader, and then you have your trading view. For trading view, you have to pay a token before you can use the app. You can download this app on App Store or your Play Store, all right. And then for systems, you can download the iOS from Google. Now, for a buy or a sell to happen in the market, two currency has to be paired together. Example, Euro USD, that is Euro versus USD. When I say, when you hear the word pair, I mean you see this line here that is here, okay, currency on that currency. When you see these two, EUR means euro in currency euro, and then USD means US dollar. All right, so when you see EUR slash USD, it means they appeared, okay, that is euro versus USD. So if you want to have buy or you want to sell in the market, you must actually find something like this two paired currency that you either have to buy or sell. And in the market, there are three groups of paired currency. You have the major pair, the minor pair, and also the exotic pair. They are groups based on their market demand. Okay, they are grouped. These currencies are grouped based on their market demand, value, strength in the market. And then what are the major currency pair? Okay, you have your Euro USD, GDP, Chef USD, GDP USD, and New Zealand USD, and then you have your USD and then CAD USD. So there are about 1, 2, 3, 4, 5, 6, 7. 7. Okay, so these are the 7 major currency pair that you have. And then you have your minor currency pair, which is Euro, GBP, Czech, GBP, NZD, CAD. So a major currency has to do with any of these major currency and the USD. That is any of these Euro, GDP, Czech, JPY, and the NZD, USD card, and USD. So any currency that has USD, a major currency that has USD is called a major currency. While a minor currency, all right, while a minor currency has to do with a major currency that has no USD, okay, but other currency that they are paired together like Euro, GBP. Okay, if it was a USD that's in the GBP, that would make it major. But since it's Euro, GBP, it becomes a minor. All right, this chef JPY. If it was a USD that this JPY, if it's chef USD to be major, but since it's chef JPY, it's minor. So when you have two major currency that is not the US dollar that are paired, all right, they are called minor currency. Then the exotic currency, these exotic currency are currency paired with other currency not among the major or minor currency. Example, when you have USD with Naira or GDP with any other currency that is not in the major currency, all right, you call it exotic currency. Now let's go. I believe all this is clear. So let's go back to the chart so that I can give you some explanation on how the chart works. All right. Now before you go to the chart now, okay. Now when you look at this chart now, you can see the interface. You can see this. All right. These are what we call candlesticks. These are Japanese candlesticks. Okay. These that you can see. All right, they are called Japanese candlestick, and I'll be explaining them to you in a moment and how they work. All right, so you can see. So I'm just trying to. These are candlestick. Okay, they are candlestick. That in a moment you will understand how they work. Okay, so I'm going to explain what candlestick are and what candlestick means. Okay, now this is an example of a candlestick. This is just a candlestick, a Japanese candlestick. Okay, as you can see on this chart. Okay, now you can see that we have this candlestick here. Okay, we have the candle, a buy and a sell. Okay, so we have this type of candlestick. We have the buy candlestick and the sell candlestick. Now the sell candlestick is this candlestick that when the market is going down. Example, in this our chart here, when you see this market that is going down, this red candle that is going down, okay, this is a sell candlestick. So when you see anyone that is this blue candle, green candle that is going up, it's a buy candlestick. On that chart, this candle might not be green, it might be red or different color, any other form of color. But as long as you see something like this going up, okay, in the forex, when you see anything going up, it means buy, down is sell. Okay, down is sell. Sorry for that. Down is sell, while up is buy. So when you see a market, you see a candlestick going up, okay, is a buy. While it's coming down, is a sell. So when you see these green candlesticks that are pushing up, it means that the market is in a buy. And when you see these red candlesticks that are going down, it means the market is in a sell. All right. Now you see now the candlestick. Now let me explain candlestick. Now if you can see there's what this in the candlestick here is called a wick. Okay, this is a wick, the candlestick. When you can see it on this chart, you can see something like this. Okay, if you look at it here, let me, okay, look at it here, something like this. These are wicks. Okay, these are all wicks. Okay, so these are wick. Now when you see this is a wick, all right, then the body, now from here to here, this is the body of the candle. Okay, then the candle opens, a buy candle, please take note of this, a sell candle opens from the top, all right, it opens from the top and then it goes down and closes. A sell candle opens from the top and goes down, while the buy candle opens from the down and goes up. Since the candle a buy is going up, it has to start from the down, then goes up. While a sell is going down, it opens from the up and then it goes down. So this is the body of the candle, this is the wick. Then when you see the candle, sometimes before when it opens, all right, this is what it does. When it opens from this point here, it goes backwards. Okay, retrace backward and come back down. All right, when the candle opens, it returns back to this wick. Okay, that is, when the candle opens from this point here, excuse me please, the candle open from this point here, then it goes up, all right, like this way, then it comes down, and then when it gets here, okay, then it will return back and close here. So it will get to this low, all right, and then it will now return back and close here. Okay, then so also too with the buy candle. Buy candle opens from the bottom and then closes on the top. Now there are names. These candles, some of them have names. You have the Morobuzo, which is actually the longest candle. If you look at this, is one of the exceptional candle that does not have wick. Okay, this Morobuzo candle is the longest candle in the forex market, and it does not actually have wick. Most times you see it appears without wick. Okay, called the Morobuzo Japanese candles. Then you have the hammer candlestick, inverted hammer. Okay, which sometimes this can appear as shooting star. All right, this can also appear as a shooting star candle, which we are going to come in later on. Then you have your doji. Okay, then you have the connecting candlestick. Okay, this connecting candlestick, let's assume that you want to another candle as this, can like you can stand on it. Okay, this is a long buy. All right, when you do something like this in the market, this pattern, okay, it forms a long Morobuzo top. Okay, so that's what we're connecting candlestick. Then also you can see the spinning top. This spinning top here, all right, is indecision candle, which you are going to know more about it. This spinning top, it's when there's a more time, when there's an indecision in the market. Or that's why I see this spinning top. Then you have these three soldiers. When a trade is trending upwards, it's moving upward. All right, when there is a buy and it's going up and up and up, all right, like something like this, like this, like this, like this, you know, a buy, all right, which is going on a bullish. All right, in forex trading, when a trade is going up, it's called bullish. All right, when it's coming down, it's called bearish. Okay, so when the trade is coming down, which is a sell, is called bearish. Why? If it's going up, which is a buy, is called bullish. So please take note of that. So these three soldiers is when the trade is going up, you can see them the three soldiers up. Then you can see bullish engulfing. In bullish engulfing, this pattern now, when a trade breaks down, okay, when it breaks down, like the example, something like this, when this trade is coming down, okay, you see this will be black, okay, and then this candle, you just have this pattern like this. Okay, this is engulfing. When you see a trade, a sell coming down, a candle coming down, breaks through, okay, breaks this resistance of this particular candle and it drops down, is a bullish. So you can see bullish engulfing. Please keep this pattern in mind. Okay, I know this is just the last class, but it's going to help you later. Then we have the morning star. The morning star pattern, when you see something like this, okay, there's a sell and then it goes up for a buy. It's about to pick up, okay, to continue, maybe like just continue going up like this. Okay, yes, up and up. Let's say this continue and it's going up. Okay, that's our morning star. Then you have the evening star. Okay, the evening star, now you see something like this evening star. Let's say this one to continue coming down. Okay, that is the evening star. All right, now you can see it in our charts. Okay, wow, this chart is kind of messy. Let's identify what we just talked about in our chart so that you can have a proper understanding of what now let's look at this now. When you look at this, you can see something like this. Okay, this candle now, this is an engulfing candle. You can see what I'm telling you now. Okay, you can see this pattern here. Okay, now you can see how this one dropped down. Okay, this and this, that is what I was trying to identify now, bullish engulfing. Okay, and then where is the morning star now? This one is also bullish engulfing. You can see it dropping down. Okay, you can also see something like this too. Okay, bullish engulfing, you know, you can see it dropping down. So these are actually some of the pattern that we find, okay, in our candlestick, okay, that helps you to be able to take your trade. Okay, now as I've said earlier, if a trade is going up, okay, is a buy, which is bullish. All right, that's what we use in forex trading. Okay, is the trend is a bullish trend. Okay, then if it's going down, all right, it is a sell, which is also called bearish. You can see on this chart here, you know, you can see up, okay, down, up, bullish, down, bearish, up, bullish. Okay, you can then say down, bearish, up, bullish, down, bearish, up, bullish, down, bearish, up, bullish, down, bearish. So up is bullish, which is buy. Down is bearish, which is sell. Up is bullish, which is buy. Down is sell, which is sell. Up is bullish, which is buy. Down is bearish, which is sell. So please keep that in mind and do not forget. Just know if a trade is bullish, is buy, is a buy trade, is going up, and if it's bearish, it's a sell trade, is coming down. Okay. Now, how do you get your app now? You go to your browser. Okay, you go to your browser and then you type, if you are using your system, okay, you go to your browser and you type MetaTrader 5. Okay, there's MetaTrader 4 and also there's MetaTrader 5. Okay, so either of them, you can use either of them. Okay, so when you go to your browser, this is your browser, then you click So this is it now. All right, you can just download this for free. It's an open source. This is for Windows, this is for Mac, this is for Linux. All right, so this is how it looks like. So I am installing MetaTrader 5, MetaTrader 4. Okay, I'm able to install MetaTrader 5, but I'm installing MetaTrader 4 in my system, so that I'll be showing you how to use the app, the interface, and how to go about your trading using. Now we have finished installing it. Okay, let's have an overview of our MT4. You can either use MT5 or MT4. These are MT4. Okay, and when we opened it earlier, it was like this. You get, this was how it was. Okay, with the window you have four, it was four window, and I decided to close or maximize. You can just do that, click cancel here, or you just here maximize. Okay, this is how you maximize the window. All right, this is your watch list where you can see different pairs. Okay, if you want to add more, we have like two windows open here now. This is one, this is two. On this your buy here. Okay, you can see my cursor here. You have two windows. Okay, if you want to add another window, you just go to any of the watch list that the pair. Let's say you want to add SND. You right click and then you chart window. Okay, so when you click on the chart, right click and click on the chart window, it has opened. It's still the network. It's not allowing it to come up. To come up on its own. Okay, let's just continue. It's going to come up. Okay, and then there's a chart. Okay, then if you want to change the background, okay, just now you can see now that the background is black. Maybe you want to change it to white. Okay, and then maybe you want to make some change on this candle. You can just right click on it, on this background. Then you go to properties. Then you go to properties. You can now look at background. From black you can change it to white, and then the foreground color, which is this color that you see here. Okay, so let's leave it at that. Then let's go to the grid. These lines that you see in the grid, I want to remove, make the grid white. Okay, and then the bar, which is this up bar, I want to turn this candlestick bar, I want to turn it to, let's say, red. Here as you can see, Crimson, make it red. This is orange red, and then the down bar line, let's make it blue. Yes, blue. Then the bull candle, let's leave it at the red too. Yeah, red, and then bear white. Bear candle, let's make it at the blue. Okay, so we have blue and white. So then let's say okay, voila. And you can see how beautiful it has turned from. So once you do this, you can now save. You can save this particular page so that you can save it. Okay, so that anytime you open it, let's say we'll use our save as. Okay, let's say NZD. Okay, so that anytime you can go back and you can see that it only make changes to this. If you didn't save it, it's still going to come up this way. Okay, so this is how it's going to look beautifully. Okay, then you can now, on this your left angle, you can see this particular bar down here. Today is Saturday, so we cannot take trade, but you can see that if you read what is there, the account is Take Me Demo. Okay, and then you can see the detail, the trading. Now if there was market, you can just click on buy or sell here. Okay, but since there's no market, when there's market, you can click on buy or sell. But in our next video, we can do this buy and sell. But for now, this is where you just use your buy and sell. And then this bar here, okay, which is this your bar here, like this bar, you can use it to just this is supposed to be white. Let's make it white so that we'll not have issue with this. Okay, let's go to property.
You can make that foreground black. Yes, try to help. Okay, so this line now goes, so you can see this line, the foreground is black is better. You see, so we can see these numbers that are here. Why it was white, this number was not showing. So make sure that the foreground place is black so that you can see this line and this number. Okay, so now this is also the time frame, the daily time frame. As the minutes, the 5 hours, the 5 minutes, the 15 minutes, the 30 minutes, the 1 hour, the 4 days, okay, the 1 month, and then the 1 month. All right. In the daily time frame, you choose what time frame to use while you are trading. Okay. You can move from the higher time frame to the lower time frame. All right. And then you have in your bar now you have the chart, you have your bar charts, okay, your candlestick chart and your line chart. So these are actually the three type of chart that you have in trading. You have your line chart. You can see this is line. These are lines, you can look at here, you can change it to candle, okay, and then you can change it to your bar chart. Okay, most importantly, it's actually this candle chart that we use most, okay, and then this is your line, and then this is your zoom. You can use your zoom to zoom, okay, zoom out or zoom in, okay. So I think that's actually basically it. If you want to enter a trade, this is your order here, this new order, but then today Saturday there's no trade, so that for next time you can do this. Your line, okay, your line bar, you can use your horizontal and vertical line, okay, and it is also your trend line that you can use. Okay, you can also increase the size of the line, okay, by going to your right click and with your property, and then you can easily make it dotted or thicker. Okay, can make the line dotted or you can make the line thicker. So so you can see the line that we just this line is so thick. Oh, I was not even what I wanted to do. This was actually what I wanted to do. Okay, property trend line. Okay, good. All right, so our horizontal line, you can delete it. Okay, so on your own you can just take your time to just scroll. These are different fields that you can objects that you can insert, arrow, okay, and then just on your own. All right, I think that's it for the overview of this chart. Now let's continue now. Okay, now the three types of chart which we'll talk about: the line chart, the candlestick chart, and then the bar chart. Then the time frame, we have the month and minute, hours, daily, monthly, which we just looked. And then the types of markets. Okay, types of market. Now in forex trading there are types of market that we have in forex trading. Okay, number one is trending market, number two is consolidating market, and then number three is reversal market. So let's go to the let's go and explain. Let me look at trading view. Now in this trading view, I want to explain the type of market. Okay, now for the consolidating markets, okay, when you say to consolidating market in forex trading, is a market that is ranging. A ranging market is a market that is like this. Okay, now in this you can see that this market is ranging from point A to point B. Okay, now this market is not breaking through this region. All right, which is a consolidating market. Then we have a trending market. A trending market is a market that goes higher high, higher low, higher high, something like this. Okay, now this is a trending market, meaning that the market is going up, down, up and up and up and up. Okay, then you have a reversal market. Is a market that maybe after it has gone up, okay, and then now it want to start going down. Okay, a market that has gone up and then now it start coming down. Okay, those are the three types of market. You have your trending market, consolidating market, and then the reversal market. Okay, three types of market of movement that you can find in the forex space. Okay, please take note. Now in this chart, let's look at how we can find some of this in this market now. Now, if you, as you can see in this chart, you can see that this market, this particular market here, up, you can see how it's going. This is trending market. Okay, you can see this is now means that this market is trending. Okay, which is a beautiful market. The trending market is one of the beautiful markets to trade. It's a market where you can really make profit. Then if you look at this point here now, you can see a bit of consolidating. When it got to this high, you can see this market consolidating here. This is one of the dangerous market you have to avoid. This is one of the market that will cost you a lot in forex trading. In forex trading, we avoid a consolidating market. A consolidating market is really not a good market. It's a market that you can have a lot of losses. Okay, then the third, which is actually a reversal market, you can see this market over here. After it came back up, okay, you can see that now start going down. Okay, went back up again and then start coming down. Okay, so these are actually the three types of markets that you find in the forex space. Okay, then you have your type of trader. Now there are four types of trader in the forex space. You have your scalper, you have your intraday, you have your swing trader, and you have the position trader. Okay, now a scalper is one who just enters the market from 1 minute to 5 minutes. Most times they use a 1 minute to 5 minutes chart or 1 minute to 15 minutes chart. All right, and then in maybe 5 minutes they are taking their profit very fast and they're out of the market, or in 2 minutes are taking their profit very fast. Scalpers are traders that scalp very fast on the market from 1 minute time, using 1 minute time frame to 15 minutes time frame while they are up. While we have intraday traders, which are daily traders. Okay, they trade the market on a full day. I'm actually a day trader. I trade the market for a day and then I go out. Now you have your swing trader. They trade the market. They stay in the market. After taking a position, they trade. They leave it from 1 day to 3 days. While position trader, they can leave it for a week or a month while the market is running on just one trade. Okay, now market structure. Let's talk about market structure. What is market structure? Now if you look at this in forex trading, this is very important that you have to understand now. Okay, let me better explain. Now in market, this is how the forex market move. Okay, let me draw it so that you can see. Now the forex market move like this: higher high, lower high, higher high, lower high, higher high, lower high, higher high, lower high, higher high. Okay, this is actually the okay, higher low, lower low, higher low, lower low, higher low, lower low, higher low, lower low, higher low, and lower low. Okay, so now look at this. Now this is it move here: higher high, lower high. Okay, higher high, lower high, higher high, lower high, higher high, lower high, higher high, and then lower high. Okay, then it goes to this higher. Now at this point now it stops here. Okay, this is also another, it stop here, and then it start coming down, lower high, okay, higher low, lower high, higher low, lower high, higher low, lower high, higher low, lower high, higher low, lower higher low. This is very important, as you need to know this as a trader. Okay, because if you know, this is actually the beginning of you knowing how to take your trade in trading. Okay, now when you look at this candle, what you see here, okay, now you can see what I just explained. Now you can see, now this is higher high, lower high, higher high. Now let's go to, this is actually a monthly time frame, so let's go to a better time frame where we can see this very clear, maybe 15 minutes time frame, where this is so much obvious. Okay, where is my charts? Okay, good. Let's go to 4 hours or daily. Let's say daily, or 45 minutes, 1 minute daily. Now daily charts, say 1 day. All right, so okay, good. So now this is our daily chart. Okay, so you can, what I was trying to explain, I think higher high, lower high, higher high, that's how the market structure move. Lower high, higher high, lower high. Okay, you can see it came to the same range, and then higher low, okay, lower low, higher low, lower low, higher low, lower low, higher low, lower low, higher low, lower low. Okay, now this is how the forex market move. All right, if you are able to catch up a move as this from this bottom here down here, you're in a good profit. While if you're able to catch a move from this top here, okay, down here, okay, you are in a good profit. All right, so you see now you are taking a trade that is going up, or you are taking a trade that is coming down. Either way that you make your prediction on any trade is profit. Okay, so that is how the market structure is in forex trading. All right, okay, then now next, lot sizes. All right, what are lot sizes in forex trading? Okay, lot sizes are the size of let's say the size of amount you use to trade. Like in forex we have standard lot size, okay, which is from $10. Maybe you want to enter a trade, and then you want to enter, use $10 lot size. Okay, $10 lot size counts from 10, 20, 30, 40, 50. So it counts on every $10, every count on the trade, every movement on the trade goes with $10. So it counts from 10, 20, 30, 40, 50, 60, 100. Okay, while if you are using the macro lot size, okay, it counts from 0.10, okay, 0.10. all right, which is actually not up to uh, $10. Okay, so I have your 0.10. Okay, then it start counting from 0.10, 0.20, 0.30, 0.40. Okay, so 10 of 0.10 will give you your $10. Okay, then you now have your micro, okay, which is 0.01. Okay, start from 0.01, 0.02, 0.03 to 10. So 10 0.01 will give you 0.10. all right, while 10 0.1 will give you 10. Okay, so 0.01, 10 0.01 will give you 0.10, while 10 0.1 will give you 10. All right, and standard lot is 10. So 10, 20, 30, 40, that is how it counts 10 pips up, 10 up. All right, while 0.1, okay, 10 of it is what will give you 10. All right, so that is how Whether this was your standard lot size help you to enter based on your account size. If your account size is big, you can use big standard lot. But if your account size is not big, it's better you use small standard lot. We'll talk more on it in other videos. Okay, then you have your stop loss. Your position. Your position has to do with your entry. Okay, you can take one or two or three or four or five entry in forex trading. Let's say you take $10 entry, you now took a 0.10 entry, and then you now took a 0.01 entry. Okay, you can take more than one trade at the same time. That's what it means. Position meaning how many trades are you taking at the same time. You can enter NZD USD, you can enter GDP JPY, you can enter at the same time 5 to 10 trades running simultaneously. While your stop loss is when you enter a trade, you have to put a stop loss to know where the market, if the market is going to, if you are going to be knocked out, or if the market is going against you, you put a stop loss so that you will not lose much in the market. All right, when you are trading forex, you need to learn how to use your stop loss. Now let me explain. When you go to the chart now, let's say example on this chart here. Okay, you pick a trade from this region here, maybe from this point here, okay, up here, and then you want the trade to come up to this point here, okay, to this point. Right, now you can decide to put your stop loss below here. Okay, so that when this trade goes against you, let's assume at the end of the day this trade goes down against you, okay, you can decide to, instead of taking all your money out, because if this trade that is going up, okay, once it goes down against you, your money will go minus. So to avoid you not to have too much minus, let's say the moment the trade goes down against you to this point, you put a stop loss, all right, so that you can go out from the trade and wait for another trade. So the beauty of stop loss is this: it enables you not to blow up your account on just a trade. Okay, enables you to go out from a trade. Why your take profit now your take profit has to do with the point to which you want to take profit. Like this line I do now, maybe I want to take my take profit here, and whenever the trade move from that point A to this point here, all right, the trade should close automatically on its own. So we can set a stop loss or a take profit, all right, from as we take our trade, so that the trade, we can go out from the trade when it gets to our take profits. All right, now leverage is what a broker provides for us to be able to trade with. Let's assume that you have $100 to trade with. Okay, your $100 can be multiplied to 1,000 broker. A broker can give you extra 10 leverage or 50 leverage or 100 leverage. All right, so that with your $100, okay, if your $100 can only take you 2 trades, okay, it will be able to take you 5 to 10 trades. So leverage provides you an avenue for you to be able to maximize the funds that you have, okay, and then get greater profit. All right, so let's say assume the fund that you have is 100 naira, and then you can either target the profit of 100 naira. Okay, the leverage give you the opportunity to be able to target the profit of 1,000 naira just using your 100 naira. Okay, then we have different leverage in the market. We can do 1:100, which is actually the best that I suppose. When you want to open your demo account, this 1:100 on your live account, 1:100 is the average and best leverage that is good for you as a beginner. Okay, or 1:200, we have 1:200, 1:500, 1:1000, but 1:100, please, I encourage you to go for that. Then we have your margin. Okay, that's what we call margin in trading. Margin has to do with the number of trades that you can take, all right, before the market will stop you from not taking more trades. Let's say with your $100, you can take maybe 5 trades, and after 5 trades, you will not be able to take more than 5 trades. So there's a margin that is provided for you to be able to enter the number of trades that you can enter. Once you use up that margin, you can enter more than 5 trades. Okay, once you use that enter 5 trades, your margin exhausted. All right, and then there's what we also call margin call in forex trading. Okay, to get to a point that when you use above the margin that is given to you, you enter into margin call. Okay, and then the margin call will, when your trade gets to a margin call, okay, you are knocked out from the trade. All right, margin call. So when your trade got to the margin call, it means that, let's say you have $100 and then your margin call is when your trade gets to $30. Okay, the market will close. All the position that you open is going to close against you. So let's say you enter 5 position and then at the end of the day it goes against you. All right, and then you exhausted your margin. Then your money reduced from $100 to $30. The market is going to take you out. Then you have equity. Okay, equity and balance, these are something that you see in your balance. Okay, equity has to do with the present floating trade that you have. Let's assume you have $100 and then you enter a trade 5 trades. Okay, and then giving you profit of $50 on the $100. It's going to be reading 150 on your profit. All right, but on your balance will still remain $100. And equity review shows you the current present happenings of your balance, your account in the market. If you are having $50 profit, okay, that $50 profit at any time can also move to minus $50 loss. So your equity only shows you what is happening in your profit margin, either you're in profit or you're in loss, but it's actually not your actual balance. Your actual balance, which is your account balance, shows you your close trade balance. It is when you close this equity, okay, from the floating profit or losses, that you can now, it will now reflect in your actual balance. But if you are having $50 profit in your equity and then you did not close it, the market can still go against you and then clear up that $50 and it will come to losses. So your equity shows you the current happenings in your trading, plus or minus. If you are in profit, it shows you how much profit you have been able to accrue, all right, but yet to be claimed, yet to be closed trade. And if you are in losses, it shows you. It is when you close the trade now that it will reflect in your balance. So that your equity, whatever is happening in your equity will not reflect on your balance, plus or minus, until when you close the trade. All right. Then there's what we call long and short. In forex, we use the terminology long. Long means you are going long, which you are going on a buy trade. While if you are going short, you are going on a sell. So with this terminology in trading, long means buy and then short means sell. Okay, then trend lines are the lines that I drew earlier, but let's go to the chart now. Okay, now this line like this is a trend line. Okay, a trend line, we use a trend line. Now next video we're going to explore we use a trend line, but for now just know that this line is a trend line. Okay, then you have your horizontal line. Okay, these ones are your horizontal lines. Okay, then you have your vertical lines. Okay, which are these ones? Okay, the straight line, they are your vertical. Right now there are types of order in the market. Okay, you have an instant order, buy limit order, sell limit order, buy stop order, sell stop order. Now instant order is that when you go to the market and then you see a buying trade or a selling market, you just decide to enter it. Okay, instantly you just press a buy or a sell. All right, to buy every current commodity in the market. All right, while you have your buy limit order are the order that you set for a time. Let's assume that you want to buy the market when the market gets to point A or point B. Okay, you can set a buy limit order. All right, example now, a buy limit order is used when, example, you want, let's assume this example now. Let's say this trade is going up, okay, the trade is at this point, okay, this is at this point now high, but then you want to buy when from this point here, let's say from this point here, okay, this point here, the red, this is where you want to buy, and the trade is already at this point, up here, okay. Now what you do now, you can just set a buy limit order here, all right, so that when the trade retrace back, if it comes down back to this point, hit this order, okay, it can easily go back up. All right, so you set a buy limit order, okay, where there is going to be a retracement. So once this trade returns back here, it picks it up and then goes up. Then you can maybe have now your stop loss will be here. Your stop loss is always below your order, your buy limit order. Okay, so if you are also on a sell limit order, okay, sell limit order is, let's say the market has gone down to this point here, okay, you enter the market from this point here, okay, and then the market has gone down to this point here, okay, let me put this right here. But then you want to pick your order from this point, this middle point here. This is where now you want to buy. So you now wait for the trade to retrace backward up to this point. Okay. Once it retraces here, it will pick your order and then return back down. This is where you are expecting it to return to. Then you can put your stop loss here. So most time buy limit is actually most time used, okay, when you want your trade to retrace back to a point. Right, and then pick it. Then you have this now, this order which is your sell, buy stop and your sell stop order. Now your buy stop and your sell stop order is just as simple as, let's say this is the point where you want to buy, okay, and then the market start from this point here. So whenever the market gets to this point, it picks it up immediately. Even if you are not around or maybe you just set it up, it picks it up and then your profit start counting. Okay, so you set it, you just say your buy stop order or sell stop order as where you want your market to pick the trade. Let's assume too you have also a sell order here, okay, at this point, okay, and then maybe when the market was at this point and then you want to go and do some stuff, you can set it and then it will come. Once it gets to this point, it hits it, it picks it and it continues. Okay, so that is how you use your buy orders, okay, on a trade. All right.
Now, how do you register your chart to a broker? Okay, how to register your chart to a broker? What you just do now, you just go to your file and come down to log into trade account. Okay, now when you click on log into trade account, now you can now, if already you have a broker that you want to trade with, okay, you can just click down here and then search for the broker. Okay, but if you don't, by going down to the file and then you go to open an account. Okay, when you go to open an account, it will ask you to find a broker. Okay, let's say we want to use Stickmill. I use Stickmill as a broker. Okay, so you can just say Stickmill. Okay, then click on find. Okay, now so click on find, take us to next. Good. Now you can see Tickmill, a list of Tickmill now. Okay, so let's use any of the Tickmill. and open up a demo account. Okay, open up a demo account. Okay, good. So take me open a demo account. Yes. Okay, so connect and using open a demo account. Yes, open a demo account. So go to next. Okay, so now these are the details of our demo account. They'll give you your name, password, and you have to fill up your first name. Okay, let's say my name is, Dan, and then the end. Okay, after you don't fill in this, and then you click on the demo, and then you click next, agree, and okay, once you are done, that is when the demo account will now be open.
Okay, so now for those using phone, okay, if you want to open your demo account after you have downloaded your, this is my meta 5 here, click on your meta 5. Okay, then this is the interface of the meta 5. I've already taught, for those that will be using system, I've already taught you how to use the interface of the system. Alright, so if you are using phone, this is a meta 5. Okay, now if you click on this quote here, this down button here, I'll have to be cycling it so that you can be seeing what I'm doing. Okay, let me take my brush tool now. Okay, now if you click on this quote here, you can see this quote. Okay, it will show you your watch list. All right, so this is actually, this is NZD and then these are actually indices pairs. All right, this is NZD. Now with this plus sign, you can decide to add other forex major pair. As you can see here, there are other forex major pair. If I click on GBP now, okay, you see it has, if I go back to my watch list, you look at it now, it has been added. Okay, now you go to my chart, this is my chart, and then if you click on the middle of just click on the screen of the chart, you will see your time frame will appear, or your time frame, and also to other options will come up. Then if you want to change pair, you just click on this. Now you can also use this spot here, this where you see this NZD. Okay, if you click it, you see a drop down if you want to change into another pair. Okay, then when you click on trade, this is where your account is now. Okay, where you see your balance and you see your equity and this is your free margin. All right, note that trade is here also too. You can see your trade button here. Okay, so you just tap it, you see your account, your balance, your equity and free margin, which actually I've explained in the tutorial. You can go back to the tutorial and go through it. Okay, so if a demo account is given to you, if it's whatever amount that's given to you, or a live account, you see it here. Then if you want to actually open a demo account, you come back to your quote, then you go to, you see this part here. All right, you click on it. Okay, the moment you click on it, you see this drop down. All right, so you see manage account. In this manage account now, okay, that's what you are going to click. If you click on the manage account now, it will ask you to add, then you go to this button here, this particular button here, plus button. Okay, then you just click on the plus button. Then you can now, in this bar, you can type in your find broker here. Okay, you can now type in any broker that you want to use. Okay, when you type in any broker, let's say Handtech, okay, it will bring out options. Then you just fill the necessary form that the broker has to fill, and then they will now send you your account details, or for a demo account, of course, you want to open, They'll send the account details to your email, okay, your password and your login details and the server. Please make sure that you choose the correct server while you putting in your passport. Then when you put it in, that is all. Okay, then if you want to take your trade, all you just need to do is just to come to this trade button here, okay, which is this button here, okay, and then you just click on this plus sign, which is this sign here, this plus sign here, okay. When you click on this plus sign, okay, then you see your buy and your sell. Look at your buy and look at your sell, okay. Now you can look at this point, this market point now, okay, market execution. Now we'll talk about your where you find your, what do you call it, market execution, where you find your buy limit, sell limit, buy stop, sell stop, and the others that we talked about earlier, okay. And then these are where your lot size, you can decide to put your lot size in this point here, okay. If it's standard loss, lot, whatever lots, and this is where you put your stop loss, okay. This one is your stop loss, this one is your take profit, okay. So that is just basically it if you are using phone. All right, so that's just all for now.